Good afternoon, happy Friday, and welcome to the Market Close Report for Friday, the 29th of May. Well, the Aussie market today had a cracker. The best day in a couple of months. In fact, we saw the ASX 200 lifting by 138 points or 1.6% to 8,731. It actually means that we've pushed higher over the course of the week by around 0.8%. And it also means that we've ended the month, at least the trading month, in positive territory as well. We'll get to that in a second. Now, once again, one of the key drivers has continued to be the conflict in the Middle East, which has played havoc with the market since it began about 13 weeks ago now. In fact, our market is still down about 5.5% since late February. That's wiping out something like $230 billion of the Aussie market's value. But today was certainly good news that helped the ASX 200 lift. We had the US and Iran at least reaching a tentative agreement to extend the ceasefire by 60 days. It must be said that the ceasefire went into place 7 weeks ago. And of course, there was the occasional altercation since, though. And there were also a number of caveats when it comes to this agreement. President Trump has yet to approve it, which is a very important point. Iran also didn't immediately confirm the deal. And then we had Vice President J.D. Vance saying that the US and Iran are going back and forth on a couple of language points. So this essentially means that when we come back online on Monday, we could be having potentially a different conversation. Just something to keep in mind. Also, a very stark contrast to what we saw yesterday on the market, where at one point we were having our worst decline in about 12 weeks because of escalating tensions between the US and Iran. Now, early in the week, of course, on Wednesday, it had very little to do with, the movements had very little to do with the Iran and US conflict and more to do with inflation, which came in a tad below what the market was expecting, at least for headline numbers. And trim mean inflation also came in smack bang as expected. So this basically has the market thinking that there's about a 50% chance of an interest rate hike by August. Before the inflation data was handed down Wednesday, the market thought that was closer to 60%. So it's been a pretty big week. Let's look at sectors today. We had just two sectors underperforming, the utilities and energy. They were both down slightly. All the rest of the market was higher, led by the materials, which rose around 2.9%, and also tech and industrials, which rose closer to 1.5%. There were plenty of winners on the market today as well. One of the standouts ended up being 4D Medical, which rose by almost 19%. This is an Aussie company that develops software to improve X-rays and CT scans, providing greater detail to those who use that. So basically had a win over in the United States and announced a partnership with an American company called SimonMed, which is one of the leading medical imaging providers in the United States. So it's getting its technology into 170 new imaging centers in 10 US states. Also, Westgold Resources was up a good 5.3%. Gold miners overall dominated the losers list yesterday because of a decline in the gold price, something that the conflict in the Middle East has been playing a part in. So in recent months, when tensions have escalated, the US dollar has strengthened. We've had oil prices spiking, bond yields have risen as well, and in turn that has weighed on gold prices. So today, the good news on the Iran-US front certainly had gold prices lifting, and Westgold Resources managed to benefit. Insurance Australia Group up in the order of 1.2%. This is the group behind NRMA. Well, it settled a major portion of a long-running proceeding in the federal court. This relates to costs associated with the collapse of a financial services company called Greenshill Capital, and Web Travel up in the order of 2.8% as well. This is the group behind WebBeds, which is a travel marketplace used by the travel industry. Well, had a great week on the market. It's up in the order of 15% in just 5 days, and this was largely thanks to some stronger results a couple of days ago. There were losers, though, on the market today. One that was really hard hit was IDP Education. It fell by more than 16%. Now, a broker today warned of some near-term pressures from weak visa volumes, policy on foreign students. So, this is essentially how it makes the lion's share of its money. These English proficiency tests is one of the largest providers of that globally. And also CSL was down around 1% today. Now, just a reminder, this was briefly Australia's largest company not too many years ago, where it received another price target cut today and a broker downgrade as well. And this is a couple of weeks after providing that trading update where it once again lowered its revenue and profit expectations even further. So CSL is essentially just almost halved in share price just since the start of this year. And I've got to mention Bubs Australia, it was down about 2%. The infant formula maker provided a trading update on revenues and profits, which obviously weren't that well received by the market. It listed a laundry list of challenges from supply constraints to air freight becoming more expensive because of the Middle East war. So its shares have fallen, and kind of echoing some of the concerns that A2 Milk had a couple of weeks ago, which basically highlighted the US-Iran situation and how this is impacting air freight and making it more expensive to get product into China. And finally, Karoon Energy down in the order of 2.2%. It was caught up in the sell-off in the energy sector. Now, I did mention earlier that it is also the final trading day of the month of May, and overall it ended up being an okay month. We were up about 0.75% in May. It also means that we've just snuck into positive territory for the year overall so far, only just by about 1/5%. Doesn't sound overly impressive, but considering that in March we fell by almost 8% because of the conflict, this was certainly a pretty good outcome that we're in positive territory again. The sectors that really stood out this month were the materials and consumer discretionary, and the big losers were healthcare and also the utilities. Now, looking forward to next week, we've got plenty of economic data released. Three that will get attention on Monday will be an update on property prices in Australia in May. That will get more attention, partly because of the budget, which has really brought an additional focus on property. And also we'll get a Melbourne Institute inflation gauge for the month of May. So it doesn't get as much attention as the official ABS data, but it's a bit timelier. This is for the month of May rather than April. And then we've also got an update on the number of jobs being advertised in Australia, something that can be more forward-looking than just unemployment and employment numbers. Looking at currencies very briefly, the Aussie dollar sits at about 71.6 US. It also softened against the euro and the Japanese yen. On that note, have a great evening, everyone. A fantastic weekend. Look forward to seeing you next week.